Hey guys, it's been a while since I recorded a video, so I'm going to go ahead and record one here. You view, um, enter presentation mode. Right now, if we look at the daily time frame, we're dealing with a severe pullback, but really nothing is violated here. It's definitely oversold on the RSI, and if you follow Elliott wave theory. This is something that's looking to bounce, sometime soon, if it does follow it. We have this is the first leg up on the weekly. This would be the corrective wave 2. So right now we're working on the third leg. So what I'm looking at right now is to try to play this long. And within this downtrend, we're in the midst of a channel here, and the channel break would essentially mean the start of this third leg of a third leg. So I'm looking to play this long. If we see this channel here, it's been channeling down for the past 5 days, and if we place the ABC corrective waves on here, we got wave A, B, C down, and then we've got another A, B, C. So this would make sense that it would bounce here. Shorter time frames, if we want to really look at it, we do have a 5-wave pattern here. Got the 1, 2, 3, 4, 5, and that really signifies that it's the transition between a downtrend and an uptrend. So right now we have the Fed minutes happening tomorrow. So I am effectively looking at, if the minutes are good, that I would be looking to take this long over this high, and really my targets would be something that's pretty crazy. But since this is a third of a weekly, I mean, you could effectively have targets based off this bottom fib. You could have targets of 225. I mean, that doesn't necessarily look unrealistic based off of this chart pattern. That if it were to go, that it could go up that high. So that's something to basically keep in mind, that if this breaks high, there's a lot of room for this to run up. So that's kind of looking at the overall market. There are some specific stocks that I'm looking at first and foremost. Is Apple that I'm looking at. Like I said, this has undergone that ABC correction. So we've got I'm trying to figure it out here. So we have the A, this minor B up, and then the C down. And right now we're kind of undergoing that, almost like an inverted head and shoulders here on the 30-minute. So if you play this long, this has a lot of room to run to the upside before earnings, which happens around the 26th. That's not necessarily accurate, so I don't necessarily follow that. So like if this breaks above, ideally I would be targeting this high here to take out that. Hold on, let me actually, I think let's do some fib retracements. I'm not exactly sure how much power it would have to get to that top before, but I mean, I'd scale some around this 38%. I don't know why that's inverted. And the 62%. So I'd be looking at those two areas to scale and see where runners go. I mean, I might, based off this overall pattern, hold some through earnings, that if it's up well enough and I have enough cushion on it, that it's something that I would definitely hold if they're runners, and let them see what they can do. But this is looking very bullish, even though that I've got the sharp downtrend. But I mean, even if you look at this, you've got the A, B, C correction, which is exactly what you're looking for a reversal play. Maybe, and once again, you can clearly see 5 waves up. 1, 2, wait. 1, 2, 3, 4, 5. I mean, you can definitely see the 5 waves up, and then you've got the head and shoulders here. This is definitely a pattern that is tradable going forward. So I would definitely be looking to play Apple long, even though it's had this sharp downtrend. But I mean, it's nothing to worry about. Which time am I at? 5 minutes. Tesla's another one. I tried drawing these on here before, but you've got the ABC. ABC, and then as a result you have the A down here, B, C, and this has got the same trend break pattern, channel break pattern here. So let's see if I can make that a little more clear. How it's really breaking out of that channel that it's been in, and once it kind of breaks this high, I mean, this has, like all the other stocks, that it's got room to run up. I mean, it could, very easily test those 21-day highs up here, and then it very well could continue on. I mean, this is something that's A, B, C coming down, so I mean, it could very well. I don't want to get my hopes up about it and let the runners run, but I mean, this is something that's very bullish long term if it goes ahead and bounces here. Guild is another one. It's been very strong the past few days within this pullback. It had some news or something about it that pushed it down, but now it's forming a nice ascending triangle. So I would go ahead and really take it over, really not today's highs. I would really take it over yesterday's highs, because it kind of went up and then it came back down off the gap and it retested. So I would really use the 98.71 as a trigger going high, and then really carry that through the various Fibonacci levels. Let's wait for it to pull back up here. Pulling it off the 68, and then the 70, the 76 wouldn't be bad level. So this is something that's very bullish coming in, and if this thing breaks this gap, I mean, it's got the entire room to run up, and it's got the market pushing it. So that's something that I'm watching. Qihoo is something that looks very bullish to me. It's got a flag pattern going on right here, but it looks like it's got the downturn. It's got the 1, the 2 that's not lower. So I mean, if it breaks this high coming up here, if it breaks out of here, I mean, it's got a lot of room to run up. And I mean, you're dealing with a trade that's got very good risk reward, because I mean, really realistically, where do you scale within this pattern? That's a sharp trend down. I mean, it really looks like that would continue straight back up and really go back up to where it was before. So that's something that I'm watching. And then generally what I use for my stops is 100 average to range it on the hourly. So if you plug that into it, you got 70-cent stop over the trigger. Obviously I do I have it a little looser at the start of the day so I don't get whipped around, but I mean, you're dealing with a trade that's in astronomical levels here of like 20 to 1 or something if this thing goes. I mean, obviously the odds of that happening are very slim, but based off this pattern, it's worth taking the stop for. It's worth taking the 77-cent stop and seeing it watch all the way run up. So and also too, I mean, it's you look at this weekly and it's got this massive head and shoulders pattern. And I don't see why not. I don't see why it wouldn't go ahead and test that, and then it could create almost an inverted head and shoulders below it, and then run up. I mean, who knows what could happen? But this has a very high probability of falling through the upside, and then just a standard on these retracement trades is that I would look to scale at the different Fibonacci retracement levels. The 62% would be a good one to scale it, and is of course this the 38, just to take some risk off. Anyways, I'm just kind of give you guys an update on what I'm looking at right now in the market, and what I'm looking to trade. Just so you guys know, everything that I'm doing right now is pretty much fairly computer programmed in. If you guys want the code and my conditions for entry, I can probably do a video on that and kind of show you guys and walk you guys through it. So anyways, that's what I'm looking at for tomorrow. And after the Fed minutes, I'm just kind of looking for more or less the price breaking a new high after Fed, and I'd go ahead and pretty much grab all of these if we get that upward momentum. I mean, it's oversold, and I'd be willing to put some risk on the table here and see what happens with it based off the setup. So anyways, best of luck trading tomorrow, and we'll see what happens with this market.